Good afternoon, and thank you for joining us today. I am NIN.VC. I head a crowdfunded technology venture capital fund that invests in Series A and B rounds of disruptive technology companies. I started my professional career at Merrill Lynch with their private client group. At Merrill, we managed portfolio of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. While I was at PCS, 2005, IPOs were at the peak, and it was amazing to take companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. In 2008, the financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs means no exit for VCs, no return for LPs, and as a result, venture funds were on a decline. No new funds means less startup funding, low employment, and slow economic growth. Thus, on April 2nd, 2012, the Jumpstart Our Business Startup Act, or the JOBS Act, was introduced, which enables crowdfunding for all Americans. And that's how NIN Ventures came into existence. Crowdfunding is the practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. NIN Ventures is the first of its kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the JOBS Act and Rule 506C of the U.S. Securities Act made it possible for us to raise the fund. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture capital fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. NIN.VC has been the recipient of numerous awards, and I was awarded 2015 CE of the Year Illinois for innovation and contribution to the venture capital and private equity industry, including Private Equity Fund Manager to Watch for 2017 by Corporate America. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. And according to the World Bank estimates, crowdfunding will have a global market of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding models, including rewards, donations, equity, debt, and lending. The two most popular types of crowdfunding methods are reward and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes in return for gifts or thank you notes. For equity crowdfunding, the backer receives share of a company, usually in exchange of the money pledged. For NIN Ventures or NIN.VC, it will be limited partner interest on the NIN Ventures Technology QP Fund. There is a major flaw with crowdfunding, but that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, and more often follow financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposes investors to a whole new asset class which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investment like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solve all those issues. NIN.VC provides diversification, we take board seat on all investments, and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And the most important part that investors care about is the ability to direct invest and enjoy direct returns, which is not the case with a traditional venture capital fund. NIN.VC has the best of both worlds. We're a hybrid between a traditional venture capital fund and a crowdfunding portal. The market is flooded with various types of investment vehicles, including stocks, bonds, mutual funds, IRAs, real estate, and alternatives like venture capital, among others. However, most people are short-sighted and have a three-dimensional portfolio which includes stocks, bonds, and money market, versus taking the long-term approach and investing in alternatives like venture capital. Investing in alternatives allows true diversification and also helps mitigate the risk involved in having a traditional portfolio. Most people are indirectly invested in venture funds via a pension fund or any other investment vehicle. Crowdfunding allows them to directly invest in a fund of their choice by eliminating the middleman, that is the pension fund, and their management fee, which in return allows them to generate higher returns. So who can invest in NIN.VC? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investment in fund like ours is still limited to accredited investors. One must be an accredited investor and verify themselves as an accredited investor before they can invest in the NIN Ventures Technology CP Fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualify. There are multiple ways to verify if you're an accredited investor. For an individual, it's income, assets, and third-party verification. For an entity, it's asset and third-party verification. Now let's go through the investment process step by step in detail. The very first step is to visit NIN.VC and sign up. Sign up is simple. First name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested reading. You get invited to attend our events or calls like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and a W-9 form on NIN.VC. Last step is payment, and it's as simple as selecting the payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested readings on our website before making any investment decision. On that note, we're open to questions. Please type your questions in the chat box, and we'll make sure we answer them all. No questions is always a good thing. Once again, thank you for being on a call. Sign up on NIN.VC to begin your investment process. And feel free to reach us at contact@NIN.VC or 312-953-0930 to schedule a one-on-one meeting with us or with any other questions and material requests. Have a wonderful day and happy investing.